This is Bruce for Spartan Capital Markets, taking a look at this week's weekly technical market report for Sunday, May 14th. So this week, the coverage is Bitcoin, Euro dollar, pound dollar, dollar yen, crude oil, and the NASDAQ 100 index. So this is going to be a very quick review just to give you a quick kind of context for those who are newer to this type of analysis. So here we have something very obvious in Bitcoin. We have a head and shoulders top. I'm sure you've all heard of that. Well, this is one. Even though the right shoulder is higher, it's triggered. And so this is the main thing, is we have a consolidation top that has shown clear signs of weakness because we broke below and closed below the neckline, also an uptrend line there across those two swing lows. And we also closed below this swing low here. So that's a continuation of this downtrend as well at the same time. And a reversal of this just based on that. So just based on looking at it from a trend perspective, and then we can also add the fact that it's a head and shoulders top or a repeatable pattern that's seen actually much more frequently, I think, than some people realize. So here we have a good example of it. So what that means is that the target is way down here, but this is the 100-period exponential moving average where it is right now, where it bounced on Friday. And that is short-term support, but the power of the bearish top I think could easily take us down to the lower levels there shown on the chart, as well as the 200, which is the blue line there. So the 200 line is key because that's a long-term support level after it already broke above it. So it was already below it for some period of time. Now it's above it. So going back below it again is not good. So then we have the euro dollar. So the euro dollar has pulled back very clearly because it accelerated to the downside on Friday and closed the week very bearish at the low, almost essentially at the low of the week. Maybe it was 1, 2, 3 pips away from the low. I can't remember. And so it also broke an uptrend line. So it's headed towards the 34 exponential moving average and that 50% retracement as showed on that chart. That's more likely. At that point, we can look for bullish reversals. If we go below that zone, then everything becomes much more precarious for the uptrend in the euro. Maybe we're moving into consolidation at that point. We'll have to wait and see. Moving on to the pound dollar. So the pound dollar did, last week we talked about this resistance over here, which we tried to get through for a number of days and failed over a period of time. And so we could say it clearly failed because you can see the day that it failed, there was a clear sell-off, clear bearish reversal. And now we've come all the way back to prior resistance becomes support and support of the uptrend line, very importantly. So if you remember the euro has not reached its uptrend line, but the pound is already there. So what the pound does relative to the euro, I think, has become a little interesting in the short term here because of that relationship. So there's a relative relationship to the uptrend line, in other words, or an average, which is what it's representing, a form of an average. Okay, so it would be great to find support here, but this is a key zone. So if it closed below this uptrend line, we could see further selling, or it holds this zone and, turns around. So let's see. So maybe that turnaround happens Monday, Tuesday, Wednesday. I don't know, but we'll have to watch. The only problem is we have the relative strength index, or a measure of momentum, really become bearish because we broke through this topping pattern, this double top here on the RSI. So let's see what happens next. But it's in a precarious position right now and deserves to be watched pretty closely, and it may tell us something about the euro. So if it keeps falling, for example, I think the probability the euro falls increases. Then we have the dollar yen. So the dollar yen is looking quite bullish. I would say it's one of the more clearer pairs of all of the majors out there, because it came back, now it's created a double bottom recently. It broke out of the double bottom and closed above the breakout zone, or the neckline, the midsection there. So it's confirmed a double bottom bullish reversal off very clear support identified, where the 34 orange and the 200-day exponential moving averages come together, or pretty close together. So there's this compression of volatility, a lowering of volatility. What happens after that is this potential explosion or some variation on that theme. And so this is a good example, excuse me, of what you would want to see on an explosion so far. That means that increases the probability we're going to go to the continuation of this uptrend. Excuse me, I have to take a sip of water. So then we have Hathaway analysis, where Scott Hathaway has deployed some of his geometric charting and relative charting techniques to look at the market from a geometrical perspective. And I have to say that it's quite amazing how these things work out sometimes. Not sometimes, pretty much every time, really. So here we have crude, and so what is being shown here is that crude is likely to continue higher, with the first target zone at the $83.44. And so this chart is initially, the geometric nature of it is created by using the dual vector concentric circle tool and taking this high and this low and this low, and that's where the L and H and L is. And that creates the geometry, so the scale of the chart going forward, in order to find these relationships in a meaningful way. And so what Scott has then done is drawn some angles, created some triangles, and you can see the apex of each triangle. The previous couple that were done identified this high here and this recent swing low here, and it's connected to some of the relationships back here earlier in the development of the trend, and then bringing those relationships forward. So that's kind of how this comes about, to try to simplify it. And I realize it's not simple. That's why we don't get too much into that, because it would just take too much to describe it, and there's some background knowledge that is helpful and so forth. So the main thing is that the fact that there's many geometrical relationships, it tells us that the market is way more structured than is generally believed to be the case. More so even than traditional technical analysis, of course, because there's a little bit of more predictability in some of the analysis sometimes, in the geometrical analysis. Anyway, moving on to finally the NASDAQ 100. And the NASDAQ 100 is shown to be in an uptrend, and this uptrend is likely to continue as long as it stays above this angle 4/9 line right here. And of course, there's no way to know what that price is going to be exactly in the future, but it gives you some idea. And the intersection of these two lines, the 1/3 and the 4/9 line, which have a relationship to these previous price swings historically, and those relationships are being brought forward. And so it creates this channel, and then the midline of that channel, which would be a typical line to draw within any channel, has identified these resistance zone 1, 2, 3, 4 here pretty clearly, right? So definitely it can be resistance again in the future, or a break of it can indicate an important pivot. And so this line has some significance. And then also the tangent of this initial circle comes in here at 14,213. And so the intersection of those two lines happened on May 22nd. So up until that point, resistance might be seen at the midline But after that point in time, it's going to be the 14212 we want to watch. And it doesn't mean resistance is going to be seen there, but that would be the next pivot to kind of keep an eye on, because maybe it will be by then. So that is it for this week, traders. Enjoy the newsletter, and we'll see you next week. Have a great week. Bye-bye.